Hello and welcome to Market Briefing. I'm Martin Bakkerdax, European business editor here at the IB Times UK. Well, we seem to have snapped, at least for the moment, a four-day losing streak across major European indices. We're seeing modest gains across the board. No great shakes and no significant driver, really anything more than bargain hunting right now. Stocks, of course, have fallen quite significantly. The four-day stretch, in fact, has been the biggest percentage decline since last July, so it's no surprise maybe that investors are coming in and buying some stocks at the bottom. The commodity sell-off continues apace. We have light sweet crude for May delivery falling to a four-month low, trading under $86 a barrel US. It's popped a little bit from that, but really what we're seeing with both Brent and WTI crude is quite significant in terms of commodity prices, and will have a deep impact on inflation measures going forward. Now that's interesting in a whole series of dimensions. Most significantly, it will probably give central banks around the world even more ambition and ammunition in which to allow them to continue strategies of extraordinary policies such as asset purchases, etc., if they feel that inflation is going to slow and not be stoked as a result of their activities. Now, here in the United Kingdom, we had retail sales for the month of March. Remember now, March was the coldest in at least 50 years, according to the Met Weather Office, and that was borne out in very poor figures for retail sales here in the UK. They fell 0.8% on a one-year basis, I beg your pardon, on a one-month basis, and 0.4% on a one-year basis. That's steeper declines than analysts had anticipated. May not reflect weakness for the UK consumer and really may bear out more the impact of that severe March weather. But nonetheless, when you look at it in juxtaposition with yesterday's employment data, it does give a grim reading indeed for the health of the UK economy for the third month of the first quarter. So again, it's really a mystery as to whether or not UK will escape triple-dip recession when we get the first reading of first quarter GDP on the 25th of April. There's one other story you can follow on the UK economy page today. It's a lighthearted one, but interesting nonetheless. In Japan, it appears that McDonald's Japan has increased the cost of its basic hamburger from 100 yen to 120 yen. Now, that's a 20% increase, and that's several times faster than the 2% inflation target, of course, that the Bank of Japan is targeting amidst its extraordinary policy of quantitative easing. Whether or not this is a benchmark or a bellwether for Japanese spending experience remains to be seen, but it is interesting that something that is as ubiquitous in the Japanese culture as the hamburger, they sell about 1.2 billion each year. If it indeed is being lifted in price to such a significant degree, it may reflect the business anticipation of the impact of the Bank of Japan's extraordinary policy and whether or not it will stroke the 2% inflation that it's hoping to over the next 2 years. Interesting reading, if nothing else, and kind of fun on a day when we have a lot of other bad news. You can check it all out, of course, on the economy page. We'll see you tomorrow.